All right. Good morning again, everyone, and welcome to today's first panel discussion, which will focus on the need for global collaboration amid growing complexity. I'm a little bit sorry for keeping you in this room, despite the beautiful weather in Tirana, but I hope that this discussion will provide some food for thought for you. The theme of this year's conference, Navigating Uncertainty, Enhancing Societal Resilience Amid Growing Complexity, could not be more relevant. It reflects the challenges and opportunities we face in an increasingly interconnected world, where heightened uncertainty has become the new norm. The insurance sector operates at the heart of this complexity. It is grappling with risks that not only affect the sector itself, but also have profound implications for the global economy, financial systems, and societies as a whole. In this context, global collaboration has never been more critical. The challenges before us are not confined by borders, such as the growing protection gaps from more frequent and severe natural disasters, the rapid pace of digital transformation, and the increasing risks of geo-economic fragmentation. They demand coordinated, innovative, and forward-looking solutions. So today's discussion will focus on the vital role of international collaboration in insurance supervision and standard setting. We will explore how working across borders and sectors can drive innovation, reduce regulatory fragmentation, and address shared challenges. Our panelists are leaders from both the industry and the supervisory authorities. They will share their perspectives on the strategies and mechanisms that can strengthen global cooperation. We will discuss how we can ensure that the insurance sector remains robust and responsive in this environment, while continuing to play a critical role in fostering societal resilience. So I'm delighted to be joined today by an exceptional panel of leaders, each of whom brings, I hope, a unique perspectives to this discussion. To my left, Mr. John Gottfried, who is the Insurance Commissioner of North Dakota and the President of the IAIS of the United States. Further left is Petra Ilkema, as you know well, Chair of IOPA and Vice Chair of the IAIS Executive Committee. So participating virtually is three persons actually. One is Mr. Satoru Komiya, Chairman of the Board of Tokyo Marines, joining us virtually. Thank you very much from Tokyo. Very good evening. The second person is Fundi Chajibana. I hope that I pronounced her name correctly. I have never called her by her family name. She's a deputy governor, of the South African Reserve Bank, also joining us virtually. Hello, Fundi. And the third speaker is Baroness Shiriti Vadera, Chair of Prudential PLC in London, perhaps, who is also joining us virtually. Thank you very much for joining the panel. So without further ado, let me turn to Fundi for the first question. So the question to Fundi is that, South Africa is the G20 presidency this year. And I would like you, Fundi, to reflect on the presidency and please explain how you perceive the role of global collaboration in promoting effective and globally consistent standards. So what are the key benefits of such collaboration? Fundi, the floor is yours.
So sad not to be there with you in lovely Tirana today. But we start off by saying congratulations to you, Toshi. I'm very excited you have now ascended to the role of chairperson. So I'm looking forward to working with you in your new role. Just reflecting on the G20 and the role of collaboration, I think it's useful for us to reflect back on the roots of the G20, which started off in the midst of the crisis, of a financial crisis. And from those original roots, I think the G20 has come through for us in a number of ways around the importance of collaboration. Firstly, in the development of common frameworks, in the development of key principles and attributes related to financial stability, and in assisting us to moving towards common accounting and disclosure rules globally, and also in terms of assisting us in having a framework around how we deal with anti-money laundering frameworks together by bringing in core standard setting bodies into the G20 setting. And I think that this is something that has been very strong and has held the G20 in good stead, where we have groups of leaders that come across from different points of view, advanced economies and emerging market economies, yet are able to agree on a number of core principles. During COVID, we saw the benefit of how the globe had to come together to figure out how to manage issues related to the pandemic and how to mobilize finance to areas where finance needed to go. So much like the G20 has shown us these broad efforts, I think it's useful to reflect on how cooperation and collaboration in the insurance space has also assisted. And I want to talk about the G20 work and the IAIS work side by side, because these are mutually reinforcing, because they are both essential for ensuring that we do have some robust oversight, knowledge sharing, plus that we can focus on the right levels of systemic risks. So interconnectedness is getting more and more stronger in the financial sector. And without having a level of coordination and harmonization of supervisory practices, one does see that duplication arises, because as individual jurisdictions, it does become an issue where we are asking the same institutions to report to us differently, and that does contribute to problems down the line. And one sees this where you are not getting integrated systems even within individual institutions, and they have got different reporting standards across jurisdictions. And so this is an area that does assist in cooperation, that you get to more harmonization and resources can be better streamlined. The second area where it has assisted us to collaborate, and it will assist us to collaborate further, is around the closure of regulatory gaps and the prevention of regulatory arbitrage. In a number of platforms at present, we are having engagements around what it means where you have got a regulatory gap, where there is not sufficient guidance, and you're getting new financial institutions that are providing services in new jurisdictions. And we're seeing this in the area of crypto service providers, and this is compelling us to have a more coordinated discussion around harmonizing standards and thinking about best practices as well. And lastly, I think it is important to have a level of coordination in order to level the playing field for insurers worldwide. Now, what we have seen is the benefit of this collaboration through enhanced financial stability, through the holistic framework that the IAIS now puts together, where we see the performance of the large insurers globally. We're getting an additional assurance that is highlighting to us the health of insurers and what that means for the broader financial ecosystem. And that has assisted us in bedding down and improving the types of conversations. Secondly, we are getting some more insights based on the deep dives that the IAIS is conducting around what are the new trends and where are the emerging areas of risk that requires attention by all of us as supervisors. And I think that the combination of the holistic framework and the fact that we now have our new capital standard that will be implemented going forward is going to enhance stability in the coming years. For some of us who are smaller jurisdictions, where the coordination and collaboration has been most useful, it is in reflecting on what is best practice and what does best practice look like, and how we can build regulatory capacity from learning from our other counterparts as well. So in this regard, having access to global expertise, technical assistance, and capacity building initiatives does require a level of coordination. Let me wrap up by saying that as we are cooperating, we're also coming across new areas that will require us to collaborate and cooperate differently in the global space at present. The challenges that are emerging around climate-related risks, now some of them relate to the nature of reinsurance and future protection gaps that might arise, but also the risks that relate to digital innovation and the types of risks that might relate to cybersecurity that we have to look at, that does require that we have a level of collaboration and cooperation among us in order for us to strengthen risk management and to bridge potential protection gaps. So in short, as part of our G20 presidency this year, we have come to appreciate even more the need for us to collaborate further and to strengthen collaboration. And it was a great pleasure to be working with the IAIS and World Bank colleagues on the work around insurance protection gaps, where we have identified yet additional work and an additional area that we need to be looking at and how we can work together to reduce protection gaps going forward. So on that note, Joshi, back to you.
Okay, thank you very much, Fundi, for your comprehensive sort of remarks on the G20 presidency priorities and reducing gaps, preventing arbitrage, addressing fragmentation, leveling the playing field. They are never-ending kind of challenges for us supervisors. But it is good that these issues are taken up by the G20, the primary international forum for policymaking, and really thank the South African presidency for picking up the issue of NatCat protection gaps, which is a key topic of the IAIS. Thank you very much. I should have said earlier at the outset that in view of the time, I would respectfully request that the speakers will be really concise about their messages and keep the intervention in 3 to 5 minutes, please. Okay, let me move on to the private sector views. I would like to ask Baroness Julity Varela of Prudential. So from the industry perspective, where do you see the priorities for the industry and regulators working together to create a certainty and the cross-border alignment needed to unlock institutional capital at scale? So, Baroness.
Thank you. Thank you, Chair, and congratulations on your appointment. Good morning, everyone. I'm sorry I can't be with you in person, but, it was great to see some of the IAIS leadership, Jonathan Petra, at the IMF World Bank annual meetings in Washington last month. And it's partly because of their efforts in all of these fora that there's increase in the demand for perspectives from the insurance sector. Also, of course, because there is demand for long-term risk capital to deal with the myriad global challenges we face, including long-term structural trends and a very uncertain geoeconomic environment. And there's now, I think, a much better recognition that insurers can be a part of that, of the solution to that. I think it's a novel experience for us in insurance to be popular, but while we might enjoy it, we of course have to rise to the challenge that it suggests. So alongside the structural trends I'm sure we'll be discussing today, one of the things I want to highlight is that capital supply and investor confidence are being tested by global policy fragmentation and by fiscal vulnerabilities in sovereigns. And equity markets are really highly concentrated. More than 40% of the S&P's 500's market value, that's almost 30% of total US market capitalization, is now in just 10 companies. And US equities represent 60% of global market capitalization. And on the other hand, the broader capital market participation remains weak, especially low in emerging markets. And that's despite the fact that these emerging markets represent half the global population, but also nearly 60% of GDP growth. And they still only represent 5 to 10% of global, of assets under management in global equity benchmarks. I'm the chair of Prudential, which operates exclusively in Asia and Africa. So, of course, our focus is on emerging markets, and the environment has, in the last few decades, has been tailwinds. It's now somewhat headwinds, I would say. But these markets have shown remarkable resilience, not least because of very hard-won fiscal, monetary, and institutional policy reforms. And indeed, we're now seeing the opposite, talk about some of the developed markets exhibiting some traditional emerging market characteristics. But that's not to say that's the case for all emerging markets. And regardless, all emerging market economies and populations have to continue to increase their resilience. And this is where insurers have a very significant role to play. So I have some key priorities for collaboration. First, in supporting further societal resilience in emerging markets. Same problems as elsewhere: aging populations, rising healthcare costs, constrained public finances. It means that we are finding that wherever we go, insurers are increasingly integrated into pension and social protection systems. They act more like policy partners than ever before for governments, and of course shock absorbers and stabilizers for households and firms. And from the side of the private sector, it requires us to work very differently than we might have before, and to work more closely with domestic policymakers. Secondly, our role is evolving, I think, from just resilience and risk prevention to enabling growth as mobilizers of long-term capital for transition, for infrastructure, for development. And indeed, while insurers represent only 40 trillion in assets, that's quite a modest 8 to 12% of global financial assets. The fact is that we have long-term liabilities, therefore a long-term appetite for assets, and our investment horizons therefore make us disproportionately important. And as asset owners, we're uniquely positioned to help meet the demands there are. For example, 7 trillion of annual investment needed for global infrastructure, climate-related projects by 2030. However, to punch above or frankly even at our weight, I think that insurers, regulators and policymakers need to collaborate more closely, including across borders, to enhance risk sharing, which gives us diversification, and that enables us to be more effective providers of this long-term capital and resilience. So we need better interoperability of capital standards and frameworks. From a corporate perspective, our investment and our insurance structures, they span across jurisdictions, yet insurance remains fundamentally a local business. So yes, solvency frameworks should reflect the unique characteristics of each market. We agree there's no one size fits all, but capital requirements can be harmonized better at the principal level, and then tailored to local conditions and needs. And there has to be some cross-border interoperability through a much deeper regulatory dialogue and cooperation than I'm afraid to say we're currently seeing. And we need to continue to promote the international recognition of an outcome equivalent capital regime. Otherwise, as Fundi said, we end up with an uneven playing field. Again, from a perspective of a borders, having these regimes can support capital allocation more effectively, financial stability, long-term investment, and put them into areas that have the greatest value to our policyholders as well as, of course, to economies. So I want to end, I'm conscious of you said that we should be short. I just want to end with emphasizing the importance of ensuring that the voice of emerging markets is properly recognized, properly heard and acted on in the international fora like these, but like the regulatory dialogues that you have, so that we are better able to increase penetration, increase resilience and deepen capital market development in the markets that are needed the most. And we don't find this voice is always as strong and as heard as strongly in these fora, and that is what I would urge. Thank you, Chair.
Okay, thank you very much, Baroness Verada. She, for the powerful message, highlighted the role of insurance in both the liability side and asset side in terms of strengthening societal resilience. And also, she talked about and referred to the need for interoperability of a regulatory framework of such jurisdictions. So on that point, I will go to Petra on the third question. So we adopted the ICS last year, and it marked the completion of the common framework as a global standard for supervision of internationally active insurance groups. So what are the benefits of such a standard for European context, in the European context, and how do you look at the next phase of implementation in the EU and also IAIS more broadly?
Yeah, so the ICS, and I think Baroness, hi everyone online, and hi Sweetie, nice to see you again. I think she alluded to, so that's a very nice bridge. At least at a minimum basis, harmonization of capital requirements will be helpful for an industry to thrive. And if you look globally at parts of the world where there is a more integrated market for insurance, you often see that their supervisors are working together to try to find ways to at least the minimum level, do the same thing. And I think that in general helps. So the fact that we were able as a community to reach an outcome last year and have an ICS was not only a tremendous moment of decision, but it was really a change in many ways. I mean, first of all, we're not doing a monitoring exercise this year, which I think is good because there was a lot of effort. We're thinking about implementation, about how to get there, and we're talking to each other, to many jurisdictions on how we do that. And It's a minimum standard that needs to fit the whole world. So inevitably, there will be specificities that are local. And how do you strike that balance? And that also for EU is a continuous dialogue. So in EU, the implementation of the ICS will be Solvency II. Solvency II is undergoing a review that is getting to its final stages, and it should legislatively, because implementation needs to happen, and it's going to start at the end of January 27. So that is a very important one, and that is one big dialogue between industry, supervisors at political level that is looking also for this role of long-term investors. But we will get there. Meanwhile, and particularly being conscious of this part of the world where we are, the Western Balkan, they are on their way of becoming EU members. So we have dialogues on how they can move to Solvency II, what steps they are taking. And I know that here in Albania, there's currently a quantitative impact assessment on its way. So having a decision on a minimum standard, on an ICS, that's the start of a whole new process called implementation, which again will be a major dialogue on how we're going to do it. But this is the way that EU will approach it. The self-assessment, we will fill that out and also learn from other jurisdictions where they are. But meanwhile, we are reaching out also to other jurisdictions on their way. And there really the dialogue has changed from should we to how could we? And I think that's very helpful. Maybe one final comment, because I am a supervisor, so I always have a message for industry. What is very important is that on the one hand, we hear that it is so helpful if we are more harmonized in our supervision, because that makes business easier cross-border at a time that we need the cross-border benefits to deal with all the risks. At the same time, if a change is then proposed, we often get the feedback that people like to keep it as it is. And that's sometimes a bit of a challenge, because we cannot harmonize if we all keep doing exactly what we are used to, because we come from our own jurisdictions and then we try to somehow find a balance together. So here, I think in the dialogue, both sides need to recognize that in order to get the benefits from the harmonization, you sometimes have to change a bit or even let go.
Okay. Thank you very much, Petra. So continuing on the issue of harmonization, of interoperability, consistency, I would like to ask questions to Komiya-san. Would you provide a practical example of how a lack of alignment between global regulatory approaches may impact your company's ability as an internationally active insurance group to operate efficiently across borders? What steps can industry leaders take to bridge these differences? So, Komiya-san, please.
Tokyo Marine Holdings. And first of all, I would like to thank the IAIS for giving me this valuable opportunity to join such an important discussion. And thank you for the question. And Miyoshi-san asked me how the alignment between global supervisory and regulatory frameworks impacts our business operations. So I would like to share my perspectives. Today, various risks are increasingly borderless when operating across multiple jurisdictions with diverse regulatory regimes. Ensuring compliance with each country's local requirements remains a fundamental obligation. That must be accepted. And on top of that, as a global insurance group, we have established our own internal policies and standards that are applied and embraced across the entire group. This is not a bad thing. This group-wide framework actually enables us to strengthen competitiveness and create synergies, ensuring that all group companies operate in alignment beyond what is required by regulation. In this context, I would like to share two examples that show how we, as a global insurance group, approach the alignment between global supervisory and regulatory frameworks. As Petra mentioned earlier, one practical example is the adoption of the insurance capital standard ICS developed by the IAIS. In Japan, the Financial Service Agency of Japan, JFSA, will introduce an economic value-based solvency framework next March, which is closely aligned with the ICS. A common framework enables group-wide capital management in line with global standards. This helps improve both efficiency and transparency. Using a common language also enables us to communicate with not only regulators but also investors more effectively and consistently across different jurisdictions. My second example is related to AI. AI brings tremendous opportunities, and how effectively we leverage AI will be a decisive factor for insurance business. So it is not a question of whether we can leverage AI, but we must leverage AI for sure. At the same time, as for AI regulation, there is ongoing debate about how its regulation should be designed, but we have not reached a globally consistent approach at this point. What we must recognize is that we are living through one of the most transformative periods in modern history, meaning a true era of transition. While countries may need to move quickly to establish regulations addressing AI-related risks, the lack of a global alignment could cause negative side effects. For example, it could significantly increase compliance-related operational costs. And ultimately, this may eventually hinder the effective use of AI. In this context, I believe that the fundamental driver of AI transformation also lies in our purpose. In other words, what do we want to achieve or resolve through AI utilization? Too often, discussions around AI transformation focus on technical questions, what AI can do, or how we should use it, but there is a more important thing. Beyond discussions within methodological frameworks, we should always reflect on our purpose and on the value we deliver to stakeholders through the use of AI. Therefore, I personally believe that it is essential to promote both innovation and customer protection. Then, as an insurer, we must strike a balance between the new technology's possibilities enabled by an AI-driven approach and a strong focus on outcomes or results guided by our purpose. Ensuring alignment among three elements, meaning number one, our purpose, number two, the directions of policies and regulations, and number three, the contribution and outcomes we deliver to stakeholders is essential. I believe this alignment enables us to build a truly effective AI strategy that can be embraced across the organization from top management to the front line. Regardless of whether we are discussing AI or other areas of businesses, we believe it is important to consistently ask simple yet fundamental questions. Why are we doing business here? What is our business for? And what are we trying to achieve? The clarity of purpose should enhance the quality of dialogues between insurers and regulators because each party can go beyond technical details or terminologies and focus on broader societal goals. That's all from me. Thank you.
Thank you, Komiya-san. Actually, Tokyo Marine is one of the leading companies, financial firms in terms of the use of AI. They are really aggressive. I really appreciate your comments. So, since the use of AI is highlighted, let's move to ask John about how how the regulator could achieve both sort of policy objectives, driving innovation at the same time, ensuring that the customer is properly protected and the financial stability is ensured.
Yeah, well, thank you, Toshi. And I'll just want to share one. Thank you, everybody. Thank you for having us. I'll share one thing you echoed on the first panel. I certainly wouldn't find myself on a ballerina theater, a ballet theater. Thankfully, I'm not dancing, so that's good for everybody else. But I think you've seen the theme of the panel is the collaboration. And I think we especially talk with technology and AI and the newness or the rapid pace of this is evolving. No one jurisdiction is going to get this figured out right away. And we've done a significant amount of work in the U.S. We've passed our AI principles. We passed those in 2020. They were heavily modeled after the OECD principles. We've continued to work there, but we're continuing to learn from other jurisdictions. We learn things from Morocco. We learn things from other jurisdictions that are exploring this space and having different experiences, whether that's in parametric insurance and how does that interact with AI? How does that interact with those pieces? So it's a forum like the IAIS that provides that opportunity for regulators from the U.S., from other jurisdictions to come together and have lunch, have coffee, to talk about the experiences, what has worked, what has not worked, what are we learning? Because the reality is somebody's going to figure it out. And I don't think it takes a different regulatory structure or necessarily. I think we've got some foundations across the world that can handle this. But there will be some uniqueness that comes to each jurisdiction, and being able to share what has worked and what has not worked in a forum like this is really going to enhance that ability to not only, when we get it right or when we refine what that solution is, be able to implement it at speed and at scale, but it'll also share, hopefully, avoiding things that didn't work. And again, I can't be more grateful for the IAIS and for the forum that provide to do that because, I'm from North Dakota. It's a very, very small little state. I happen to be president of the NAIC this year, and that's a great opportunity. But to be able to come and learn from global colleagues across the world on what they're doing in their space, I can take that home to my state, and we take that home to the NAIC and operate and offer some solutions there. And that is an invaluable resource.
So we are talking about, addressing fragmentation and collaboration among jurisdictions. But in the case of the U.S., state regulators are in charge of insurance supervision, right? So from your perspective as NAIC president, what are kind of your reflections on how to, promote collaboration among supervisors in a diverse kind of, membership?
Yeah. No, and I appreciate the question. And I've on my flight over, I'm getting towards the end of my term and my year here, so I wish you well on your term moving in and coordinating across jurisdictions like this. The nice thing with the NAIC is there's 150 years of experience. We've got a strong foundation that existed for a long time, and so I've been able to follow in the footsteps of a number of really strong presidents that have done a great job in fostering that collaboration across the states. But we are unique. There are 56 different jurisdictions that kind of flow into the NAIC and that are representing the United States, and they all have unique needs and unique interests. And to have one body that can come together and work from a place of collaboration and consistency is really, really important. It's not without its challenges. It's not without its everybody's different. And the one thing I think that I've learned the best, and the one thing I probably value the most especially in this time that we're in this world, is insurance is inherently math, right? And math isn't political. Math it's a calculation. I can get to an answer. I can get to some sort of formulation on it. And at the NAIC, we've done a very good job of remaining kind of nonpartisan and trying to do our very best to operate from that position. And there is so much value in that discussion because, like I said, you're going to learn more from people who are different than you, who come from a different jurisdiction or come from a different state. And opening up the doors and having ability to have that communication across those lines is so critical because that's what builds to consensus, builds to collaboration. And I think it's really important to, you start from a place of understanding, you start from a place of not criticizing a fellow member, not criticizing a fellow jurisdiction or anything like that, because it's rather getting to understanding of, okay, this is a different solution or problem that you're facing in your jurisdiction. How do I come to an understanding that I can bring to the broader membership that we can find consensus in there? And sometimes we can't. There are times we can't, but we've got a flexible enough system to allow for those pieces to move. And frankly, in the United States, I think one of the values of our state-based system is a state can go experiment and can say, I want to try it this way, and we can all listen and learn and watch. One other thing I learned, I think, is that sleep is important, but I'll get to that next year. But it's been a fascinating year as NAIC president. I'm fortunate enough to lead a number of very, very professional and esteemed colleagues from across the United States. Many of them are here today. Many of them came over to Triana, and I think that's another, again, benefit of not only the NAIC leadership but the IAIS leadership is we've got a number of new first-time regulators coming to the IAIS to experience what this is and what the offerings are here, and it's that'll only strengthen our collaboration, I think, with the IAIS, which is really, really, again, very important. But we're going to continue to invest in this relationship and these opportunities because, as was mentioned on, I think, everybody on the panel, consistency and collaboration across the globe makes for a stronger market, which leads to better protected consumers, which leads to more financial stability across the world, which is, again, something we're all in favor of.
Thank you, John. And in the case of the EU, Petra, you are responsible for ensuring the kind of consistency of regulation and supervision in the EU, and you are also vice chair of the executive committee of the IOSCO. So in your kind of role, what do you see, what kind of mechanism or platforms would be very effective in promoting collaboration among supervisors? Your views?
Yeah, I think it's quite in line with what John said. So it's a lot about monitoring and identifying the risk. And there it does help that you have the same way to do that, because otherwise you're putting apples and pears in the same basket. So that is one. Now that sounds very simple. I think a lot of the discussions also in the EU we have is about that data sharing. Meanwhile, I think we're helped now by the discussion about what in EU is called simplification, burden reduction. I hear also regulatory modernization, but I think it comes down to can we achieve the same goals in a more efficient way, for example, by sharing data, so between also authorities. Now, sounds simple, requires dialogue, requires trust, requires cooperating together. So that is one. The second is sharing what we see, and that starts often from sharing what we have seen. So saying, well, I have a case, and then they explain, well, this happened, and this is what we did, and this is the outcome. I think what we want to get to is that we start sharing when we have the case. That we say, okay, I currently actually have this AI system on my desk, and what do I do with it? Is there anyone who has the same system? If we can get to that space, that would be great. But that again needs to come with a lot of trust and knowing each other, first of all. So that's why also these sessions are essential. But it also has to come again with, are we looking at the same thing in the same way? And I'm not saying identical, but I'm saying with respect for specificities, are we still having a minimum level of dialogue that to have the dialogue actually be meaningful? I think you need to get to that level. So that's another one. I think in new areas where it is NatCat risk or where it is AI, we should actually be able to achieve that I would say more easy, because no one has something they already grew attached to, because we're all starting from scratch almost. But there were also areas that are much more difficult, and you already see that when it comes to protection gaps, that a pension protection gap is more difficult because you touch on existing systems. But you need to recognize that you need to find the places where you can build success, because that will build then the trust for the tougher topics. To summarize, you need to have a certain level of the same language. That is some standardization, that is some minimum level. And then you can build on that in a good dialogue, because ultimately you do have the same goal, you do have the same purpose. And that in itself, I think, will always help us to move forward.
Okay, thank you, Petra. So we are running out of time, so I need to limit the questions to one or two. Particularly, I would very much like to hear from private sector participants. Now, currently, the buzzword among regulators is sort of, regulatory simplification, modernization, prioritization. And so that is that we should be, as supervisors, of course, and we need to ensure financial stability, investor protection, but at the same time, we need to design regulation and supervision in a manner that help support the economic growth. So from that perspective, I would very much like to hear from private sector participants with regard to, how can regulation and supervision support innovation and economic growth? How to address both objectives from regulatory perspective? And do you have any views from private sector participants? How to balance the objectives between stability, investor protection, and economic growth? Any views? Maybe Baroness Shruti?
Yeah, I just wanted to say something about AI, because of course, when the minute you say innovation,
I think the connection
particular issue about AI, which is that the role of insurance is to manage risk by pooling it. So when you get technological ability to personalize and to price all the way to tiny groups of people or risks with very specific characteristics, sometimes down to the individual, because you get so much data and so much ability to analyze it, you're in effect depooling risk. And that has very profound implications for insurance and indeed for fairness in society. So it's a conundrum, and I do really appreciate the message from Komiya-san that it's not about the technical. We should take the step back and look at what the genuine implications are. I would also say that it's really important to look at how regulation is supporting domestic capital market development. If you look at all the big financing needs in the world, actually, most of them are intended to come from local markets. But we don't really look at that. We look at the cross-border, and we ought to be working with domestic regulators to look at how they are supporting. And right now we have a lot of regulatory barriers to addressing local, there are local capital market requirements that incentivize, and they sometimes even mandate insurers to hold sovereign debt because that's classified as risk-free, even though that's actually not always the case in all markets. And even if you've got a product that's, say, guaranteed by the World Bank or wrapped, you end up with that having a higher risk classification. And that leads to a lack of investment in long-term infrastructure, etc. So I think that there needs to, it's not innovation in the classic sense, but there needs to be a mindset that says how are we supporting the growth objectives, and how is and innovation can happen across the board. And I chair a lab for Ajay Banga at the World Bank, and one of its main one of its main features is trying to create an asset class for liquid tradable instruments of infrastructure and transition finance, etc., in order to trap these huge pools of institutional capital, non-bank funds like insurers, that are not currently invested in projects. And for that level of scale, we need a high degree of innovation from regulators who are looking at this somewhat differently, and that's really what I would urge.
Okay, thank you. Final comments from the panelists, virtual panelists? If not, we have run out of time actually. So we would like to conclude this panel session. I hope that it has been a kind of rich discussion, and then we conclude. And so it is very important for us regulators to think about the need, think about how to collaborate with each other in order to make our regulatory and supervisory approach consistent with each other. It does not mean one size fits all. It does not mean kind of identical regulation supervision, but at least we need to make sure that bottom line regulation and the principles of the regulation needs to be consistent with each other. So the challenge for us as national regulators is to make this happen. To that end, trust and mutual collaboration would be very important. And we also need to have in mind the impact of regulation and supervision on technological kind of developments, and the role of the regulation and supervision in supporting innovation while ensuring financial stability and policyholders' protection. So there's lots of balancing act which will be necessary. It is a really big challenge for us, regulators and supervisors, but we will very much appreciate the understanding and suggestions from private sector participants in the insurance market in order to make sure that the global insurance sector would provide vital kind of protection to the consumers and provide kind of sufficient, important, necessary capital for societal resilience. So I will wrap up this session, and thank you very much for joining the panel. Please make a big applause to the panelists, both in person and virtually. Thank you very much indeed.
Thank you.